If gold's at $16 trillion, Bitcoin's at $1.5 trillion. Could Bitcoin 10x in the next 15 years? I believe it can, and I believe it has the properties, the technical properties, to allow it to do that. And we're already seeing that happen. It's already manifesting in that direction. Bitcoin is up 160%, and 40% of my assets are in Bitcoin. So we're having a pretty good run at SkyBridge.
Over the years, Bitcoin has gained widespread acceptance, becoming a legitimate asset class and a hedge against inflation and economic uncertainty. Anthony Scaramucci compares Bitcoin to gold, predicting that Bitcoin could increase tenfold in the next 15 years. Anthony Scaramucci is founder and managing partner of SkyBridge Capital and founder and chairman of SALT. The potential collapse of the US dollar has sparked fears in the global financial systems, which could potentially lead to a $15.7 trillion transition. As these fears escalate, Bitcoin's price has surged to touch $70,000 again, and is now the world's ninth largest asset by market capitalization, among many publicly traded companies and precious metals, to surpass gold's current $15.763 trillion market cap, with the current 19.7 million Bitcoin in circulation. Would human beings accept a store of value in the digital world? Scaramucci believes that the answer is yes, provided it meets the criteria humans traditionally seek in a store of value. On May 24th, digital asset service provider AAA released a report detailing the global adoption rates of cryptocurrencies globally. Around 562 million people, equivalent to 6.8% of the global population, now own some type of digital asset in 2024. This massive surge indicates a 34% increase from 2023, which recorded a total of 420 digital asset owners. Currently, Bitcoin has a 5% adoption rate in the United States. Scaramucci believes that if it continues to scale at the same rate as it has over the past decade, it could potentially become a $300,000 to $500,000 asset. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
You have to start out with the following premise. In the digital world, would human beings accept a store of value in the digital world? And then the secondary argument is if, and the answer would be yes, if it followed all of the typical things that human beings have looked for store of value: scarcity, easy to use, trustworthy, where we can pass it between ourselves and know that the value stays stable. And so for 5,000 years, we used gold. A group of people, I think it was more than just one, Satoshi Nakamoto's computer programming team invented a coding system, a software where we could eventually have this decentralized database. And a result of this decentralized database, we could have a link, if you will, to each other, permissionless. And so putting it very simply, I can spend money with you over this network without having to get a third party involved. And so those things are incredibly unique. It's an incredibly unique technology, and it was invented about 15 years ago. And as people started to adopt and understand the technology, it grew. I'm in the process of finishing up a book right now for John Wiley. It's called The Little Book of Bitcoin: What Wall Street Already Knows, But You Need to Know. And Wall Street's figured this out. They filed for these ETFs, and they're selling these ETFs as a potential additional store of value akin to gold. And so, yes, this is a nascent asset. It only has 5% adoption in the United States. If it continues to scale and adopt at the same speed of the last 10 years, a $300,000, $400,000, $500,000 asset. And so putting into the context for your listeners and viewers, if gold's at $16 trillion, Bitcoin's at $1.5 trillion, could Bitcoin 10x in the next 15 years? I believe it can, and I believe it has the properties, the technical properties, to allow it to do that, and we're already seeing that happen. It's already manifesting in that direction.
The U.S. Federal Reserve will cut its key interest rate in September and once more this year, according to a majority of forecasters in a Reuters poll that also showed a significant risk. And they opt for only one or none at all. That shift in Fed funds futures bets was partly because official data showed the U.S. economy expanded at a slower pace last quarter than estimated earlier, even as key inflation measures remained sticky. However, over the past few months, Fed officials have made clear they are in no hurry to cut the policy rate. Some economists think the Fed's latest quarterly dot plot projection, due this month, would show 2 or fewer rate cuts for this year, down from a very close call of 3 in March. Scaramucci argues that the Fed has no choice but to cut rates to prevent the economy from weakening and to manage significant interest rate expenses on U.S. debt. Now let's redirect our attention to a video.
I mean, right now, Bitcoin is still tracking like a technology asset. It's tracking NVIDIA. It's tracking what we've typically been calling the Magnificent Seven or the Super Six, these tech stocks like Amazon, Google, NVIDIA, Facebook, Apple, that sort of thing. And so, yes, it's tracking that for right now. It hasn't fully matured. Once it fully matures, it'll start to have correlated properties of gold. But yeah, you cut rates, you're going to expand the breadth of equity leadership in the markets. If a rate cut goes into place, you'll certainly provide some relief in the real estate market, especially here in the United States. And I have maintained that you're going to see at least 3 rate cuts from the Fed this year. There was about a 2-month period of time where Wall Street is now saying little to no rate cuts, lots of jawboning and moral suasion from the Fed in terms of what their inclinations are. But I don't really think they have a choice. So they'll cut rates. They don't want the economy to overly weaken. They're staring down the barrel of huge interest rate expenses here in the United States for U.S. debt. And inflation numbers are trending down. I would recommend to your people to please go to Trueflation, which is a website that aggregates the data for inflation. It's a decentralized data aggregator, and it's getting this data outside the traditional metrics used by the CPI. We think it's a way more accurate way to get the data. And they're saying that inflation right now, core inflation in the United States, is about 2.2%. The Fed is saying it's about 90 basis points higher than that. And if we're right and true inflation is right, they don't want to be too far behind the curve. And so I think you'll get successive rate cuts, probably starting in August, of 25 basis points apiece going into the election. The Fed is supposedly an independent organization, but that ended in 1993. And I'll explain why. Alan Greenspan made a decision to raise rates going into the 1992 election. He was up for renomination. He was nominated by Ronald Reagan 5 years hence. He was nominated in 87. In 1992, he was raising rates. George Herbert Walker Bush did not want him to raise rates. He did it anyway. George Herbert Walker Bush lost the election. A lot of people blame that on a lot of factors, but one of the big factors was the Fed. In March of 1993 or February, during the State of the Union address, Bill Clinton's first State of the Union address, the guest of honor sitting next to the First Lady upstairs in the mezzanine was none other than Alan Greenspan. And right there, from that moment going forward, Fed has been a politicized and a political entity. And so I don't think they want to be overly influential in the election. I'm not saying that, but I do think that they're cutting rates coming into this election.
Bitcoin is on the verge of reaching a historic milestone that could propel it to unprecedented heights. In a recent tweet, Kiyosaki stated, "Bitcoin will be $350,000 by August 25th. 2024 is not a lie. It's a prediction. It's speculation. It's an opinion. But it's not a lie. It's sucker's bait, but it's not a lie because any prediction about the future is not a lie. What is your target for Bitcoin?" We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.